What's going on, you guys? My name is Shiraz Ahmed, and in today's video I'm going to be explaining how to read a stock chart. Okay, so many people have likely witnessed something like this before, but imagine this scene, perhaps from a movie or even maybe at an older family member's house that likes to day trade. But the scene goes something kind of like this. Imagine a middle-aged person sitting in front of a computer, at least 4 monitors, maybe more, 8 charts, trying to trade something crazy like the Japanese yen or options on Tesla. To an outsider watching this, they have likely no clue what are they doing and what those charts mean. But what that quirky family member reading these charts is really doing is called technical analysis, which is a really fancy industry term for when investors use statistical trends to identify investment opportunities. The core belief that investors who believe in technical analysis have is that all the known fundamentals are factored into the price, and therefore they don't need to pay attention to any other real variables. So investors using technical analysis do not attempt to measure a security's value by looking at the business results like sales or earnings, like the fundamental analysts do. And I recently kind of made a video about this. If you missed it, I'll put a link for it here on fundamental analysis. Instead, technical analysts focus on the study of price and volume. Okay, so there are 4 super important technical signals that you'll need to learn if you want to read a stock chart. Number 1, simple moving averages, or SMA for short. Simple moving averages are indicators that help assess a stock's trend by averaging the daily price over a fixed period of time. The shorter the moving average, the more volatile the moving average will be. Let's look at one of the world's largest ETFs, the SPY, which tracks the performance of the S&P 500 index. This chart shows 1-year price data. First, let's add the 20-day moving average. As you can see, over the last 20 days, the price of the SPY ETF has trended sideways. The price seems to fluctuate above and below the moving average with no real trend, frankly, in either direction in sight. If you look at a few key moments here, 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 and here, you can see that as soon as the price comes back to the moving average, it seems to rebound immediately. Now let's overlay the 50-day moving average and the 200-day moving average. As you can see, these patterns of the pricing touching the moving averages and rebounding are happening all too frequently. Investors also look out for when moving averages cross, like when the 50-day moves above the 200-day, which is referred to as the golden cross, which ended up happening actually last year in June in 2020. This is a potential signal that an uptrend is about to start, which is exactly what ended up happening. So here's a price chart of the GLD ETF, which tracks the spot price of gold. From its peak in August, the GLD has spent majority of the last 7 months under the 50-day moving average, signaling a sustained downtrend that was only further confirmed as the 50-day fell below the 100-day back in November and then subsequently fell below the 200-day just last month. An investor using technical analysis here might decide to either A, short GLD, or B, avoid buying it until the indicators come back and turn positive. So here's the 1-year chart for the ARK Innovations ETF, which has been getting a lot of press lately for its meteoric rise in 2020, followed by the huge 22% sell-off that it had this past February. A technical analyst would likely look at this chart and conclude that ARK is in a sustained uptrend, although it violated the 20-day moving average back in late February. It currently remains above the 50 and the 200-day moving averages. Okay, so number 2, let's talk about support and resistance levels. Support and resistance levels utilize price history. Support is defined as areas where buyers have stepped in before, while resistance is areas where sellers have impeded the price advance. So let's look at an example here using the HACK ETF, which tracks stocks in the cybersecurity sector. Back in May of 2020, we saw Hack hit all-time high of $45 a share, only to fall back down and have the price butt up against the price here and here. This is an example of a resistance level. Often resistance levels become support levels and vice versa. As you can see, Hack ultimately ended up breaking through the resistance level of $45, and it never really went back below it, testing it twice before it began its increase in late November. Here's another example using the agricultural ETF cow that we follow. As you can see, the price peaked in the mid-30s, around $34 a share, and it failed to break the resistance level a whopping 5 times. After the final breakthrough last month, we can now conclude that $34 to $35 price range will serve as fairly strong support levels going forward. Okay, so now number 3, let's talk about trend lines. Trend lines are similar to support and resistance as they provide a defined entry and exit point. However, they differ in that they are projections based off of how the stock has traded in the past. They're often utilized for stocks moving to new highs and or new lows. Okay, so let's look at an example here. Referring back to the S&P 500 ETF we follow, the SPY, you can see that over the past year, it's been in a persistent uptrend, testing the trend line a few times and rebounding immediately after. Traders tend to look at these non-violated tests as entry points to buy. Flipping back to the Hack ETF, we can see that after the sell-off of March of last year in 2020, this cybersecurity ETF traded above the upward trend line and even tested it a few times here, here, and here. We always want to closely examine these charts because whenever a trend line is broken, it could potentially signal a reversal. Once a trend line was violated in September, we can see that the price action moved sideways for a few months. If we add in a resistance line at $50, we can now start to combine indicators to get a better picture. It wasn't until the $50 resistance was blown through on super huge volume, which is a good thing to see as it shows strength of the move in December. Only then did Hack resume its upward trend. From this point until just last month, Hack continued to be supported by a new trend line. However, when it violated the trend line last month, the results were more in line with what we would have expected to happen, and this is a sell-off. Okay, let's look at number 4, momentum indicators. There are a number of momentum-based indicators such as Bollinger Bands, stochastics, moving averages, convergence, and divergences, also known as MACD. Each of these have unique formulas and provide buy and sell signals based off of varying criteria. So for today, I want to focus on one specifically, which is Relative Strength Index, also known as RSI. Let's use the world's largest cannabis company, Canopy Growth, as an example. The RSI scales from 0 to 100. The lower the number, the more oversold. The higher the number, the more overbought or heated it is. Normally at 20 and the 80 levels, a line is drawn to help traders spot overbought or oversold conditions. Looking at Canopy, we can, over the last year and a half, see that the stock has been on, frankly, a wild ride. Selling off upwards of 60% between June and November of 2019. If we reference RSI during this period, we can see that numerous times it touched or has even been close to touching the oversold level at 20. The real big sell-off happened when COVID struck the world in March. From here, Canopy traded sideways until the US election in November, after which it basically took off straight up like a rocket. In February of this year, this is where things got a little crazy and the stock doubled in less than 30 days. As you can now imagine, the RSI level hit the high of 85, indicating this is in extremely overbought territory or an overbought period. Looking at how things ended up playing out, after reaching the 85 level, it's clear the predictive power that the RSI indicator actually has. Okay, wow, we've been through a lot here. So to summarize, investors using technical analysis focus on the study of price and volume. They try to predict a security's future price by using numerous indicators Today, we covered 4 of them. Simple moving averages, which help assess a stock's trend by averaging the daily price over a fixed time period. Support and resistance levels, which are areas in which buyers have stepped in before or where sellers have impeded the price advance. Trend lines, which are often used for stocks moving to new highs or new lows and can serve as a great entry or exit point. And lastly, momentum indicators, which help investors determine a bunch of data, including when a security is over or underbought. Now, I'd love to hear if you've been using technical analysis while investing. Drop me a line. I'll put my contact info at the end of this video. Again, I'll be uploading another piece next week, so please do hit the bell icon so you're notified. Until next time, stay safe out there, and all the best, you guys.